Greetings, everybody. Welcome to the Craig Fahle Show on Deadline Detroit. Thank you very much for joining me on this Thursday. And one of the things that I like to talk about in this program, is insurance, auto insurance. It's something that we've been debating in this state for as long as I've been a journalist, over 25 years. Auto insurance has been something that we have discussed on this program. And frankly, in Michigan, we just came out with some pretty significant reforms to the system, obviously, in the last year. And also, COVID has had an impact on auto insurance as well, how much we drive. Should our rates be impacted by this? What is this going to mean going forward? Well, I figured I'd bring in my friend Doug Heller to join us right now. He is an insurance expert, and of course, he's been working for CPAN, the Coalition to Protect Auto No Fault in Michigan. CPAN, of course, has been very, very active in the discussions over insurance reform over the years. Doug, welcome to the program. It's a pleasure to have you here.
Glad to be here, Craig.
And forgive me for that butchered intro there, but it's great to have you with us today. Let's start with COVID because it has impacted driving patterns here in the state of Michigan. Insurance companies, according to Anita Fox, who runs the State Department of Insurance and Financial Services, they were supposed to rebate some money to people. What have we seen so far?
Well, I mean, let's start maybe back at the beginning because, in March, we were paying our auto insurance rates, and those rates were based on the data the insurance companies had going back from 2019 and 18, and they made assumptions about the world. And then suddenly the pandemic hit and everything changed. We all stopped driving by order of the state law, but also because we closed our businesses or lost our jobs or were furloughed or started working from home. Whatever the reason, we saw the roads empty out in March, and that lasted pretty straight for about 2 months. And even to this day, in September, the roads have not come back. Traffic has not come back to what it was. So the moment that we all stopped driving, the exposure that the insurance companies had to us causing accidents kind of fell through the floor, and they suddenly were not paying claims, even though they were collecting premiums based on that old 2019 expectation. So when that happens, when you have a dramatic and persistent change in how much risk the insurance companies are taking on, there are two options. One, either they give us back some of our money because we've overpaid for insurance, or two, they're sitting on windfall profits. And to her credit, Anita Fox at the Department of Insurance and Financial Services did order insurance companies to come back and give some refunds, or at least demonstrate why they shouldn't give refunds. And that's better than most insurance commissioners. There are only 4 states that had full-blown orders like that, and that was a good thing. Unfortunately, not all of the insurance companies came back with really a reasonable amount, and perhaps more importantly, it didn't last. So I looked at the second largest auto insurer in Michigan, Progressive. I looked at kind of in detail to what they've filed in the state, and they gave back about 20%, even though their own actuary said they should give back more. And that was only for 2 months. And at the same time, they were recording record profits even after accounting for these givebacks. So what we saw happen was we stopped driving, we stopped causing risk, but we were paying almost the same rates as we used to pay, and these givebacks were kind of a pittance. Now, it was better than nothing, and at first, when we first started calling on the insurance industry to give back money, they said, no way, never going to happen. But about 2 weeks later, they started getting pressure from their consumers who were stuck at home and losing income, and they realized they needed to concede something. But it hasn't been enough.
Well, and you looked at it again, Progressive, just as one example, you put it out there at 20% that they gave back. Their own internal calculations suggested it should be 22.8%. But even that number seems low.
And that number is wildly low. They made in their number said 22.8% after you deduct for this and deduct for that because we have all these other expenses coming up. Well, that's what they told the department back in May or so, that they anticipated lots more expenses that were going to have to reduce their give back. Well, in July, Progressive, when they talked to their shareholders through their monthly financial reports, they said, oh, by the way, our expenses were much lower than we anticipated during the pandemic, and as a result, our profits have continued to skyrocket. So we thought, for example, that all of those customers in Michigan that we were going to give, and around the country, that we were going to give a grace period to because we didn't want to cancel people if they missed a payment after losing a job. We thought they were all going to walk away from us and just create all sorts of debt for us. It turns out the customers didn't stiff us. The customers stuck around. So they justified reducing their give back on the assumption that consumers would stiff them. And then when consumers didn't stiff them, we haven't seen any return of that money. No, they put it in the wallet, in their wallets. So because consumers didn't stiff Progressive, Progressive stiffed its customers.
It certainly appears that way, and I'm not shocked by any stretch of the imagination that a company would do something like this in a situation. But, as you mentioned, Michigan is only one of 4 states that has actually taken this sort of action for consumers in the state.
Right.
Why has there been reluctance around the country to go this route? Because California, again, huge refunds went to customers in that state.
Well,
Michigan saw some, but not as much as California in the last couple of months. In fact, Michigan saw 0, I believe.
Yeah, that's right. So first, just comparing Michigan with California, there's one important point, and I think this goes to where the director did a good job and was sort of ahead of the pack in the early phase. When you look again at Progressive, they actually report to their shareholders that they gave back a lot of money around the country in April and May, and then in June they only gave back in California because California extended the required refund because the diminished risk was still there. And of course, that was the case in Michigan. It was the case in Ohio and everywhere else. So it gets to the question, well, why? Certainly, it's not as though the insurance companies like California consumers more. The answer is that regulators around the country and lawmakers, by the way, have always been reticent to stand up to the insurance companies. The insurance companies wield a lot of power in Lansing and in all the state capitals. And in California, there's a long-standing tradition of consumer protection at the Department of Insurance, and that's been a good thing. But that has not shown up in other states. And while DIFS, the department in Michigan, was better than most, it still needs to be stronger. We did see some. I saw some other states I mentioned. New Jersey and New Mexico also took some actions, and other states did some good things. I will note that in Pennsylvania and Michigan, there were some protections for drivers who had their credit score fall during the pandemic. This is a big issue, and I've been long fighting the fact that insurance companies use our personal credit history to rate us on our auto insurance. I mean, there should be no reason for that. It happens in Michigan and in many other states. Only a few states prohibit it. Fortunately, at least in Michigan and Pennsylvania, there have been some protections saying if your credit fell because you lost your job during the pandemic, the insurance companies have to pull back from punishing you for that. And so hopefully companies will abide. But more importantly, consumers need to know. Nobody knows that their credit is being used for auto insurance. That's just crazy. Nobody would make that connection. So people need to know that it is happening. And if your credit fell during the pandemic, you better call your insurance company and say, hey, don't raise my rates because of that. I'm still a good driver.
Now, well, I should remind folks, my guest right now is Doug Heller. He's an insurance industry expert. He's been doing some work for CPAN, the Coalition to Protect Auto No Fault here in Michigan, taking a look at how companies responded during the pandemic. And like I said, this is still going on. We don't know what our driving habits are going to be. We don't know if this is going to be a permanent shift for a lot of people in terms of where they work, how often they work. I've been home for the last 5-6 months now, and I don't see myself going to an office every day going forward. It seems the algorithm for the insurers is really screwed up right now. And how long should it take them to sort of recalculate where we are?
Well, you've hit on the exact point. Not just that we don't know how long this is going to take, but that the algorithm is out of whack. And when that happened back in March, when everything sort of became disconnected from the old data, there needed to be an adjustment. That's why we called for these refunds. And because we still don't know exactly what the future holds. I mean, that's probably the understatement of the year at this point. But, in the insurance side specifically, we really don't know, is driving going to come back to 100% of the old ways, maybe 75%? We're hearing from lots of large companies that are transitioning to at least part-time work from home. In fact, some of the insurance companies themselves are shutting down their regional headquarters and just saying work from home, that's fine. So we expect there will be something different. We don't know how different. So what that calls for is kind of this month-to-month response, at least for now. That's why we've encouraged what's happening in California, which is this kind of monthly assessment and say, okay, we're still overcharging you and we don't know exactly how to predict the future, so we're going to give you back some this month and then we'll look again next month. And that's what should happen in Michigan and elsewhere too, until we can get our handle on the algorithm, until we have a better sense of what our future holds. Because insurance, we buy insurance for what we expect to happen. When the world is shaken up like this and we can't really set those expectations, we need to find a new way to be responding.
Well, it seems to me that maybe it's advantageous for consumers right now if they have a situation where their policy is coming up for renewal. This is an opportunity to rethink how many miles you're going to be putting on there, because most people, they calculate it based on, I'm going to drive 15,000 miles this year, 12,000 miles. Same with like a lease, right?
That's right.
But now you're looking at it, do the calculations and figure out if you're only driving 1,000 miles, a month or something like that or less, that should impact your rates.
Well, I'm going to take it a step further. So yes, if you're about to renew, there are two things you should do.
I just did the other day, and we'll talk about that in a second.
Yeah, of course. But if you are going to renew, one thing that you absolutely should do is shop your policy. I think we all have this sort of allegiance to our insurance companies because we think that, we'll get a loyalty discount or something, or whatever the reason may be. But the fact is, shopping, it doesn't solve all the problems, but it can find a lower rate. So if you're going to renew, shop around for one. But also make sure that the way they rate you, these companies rate you, is based on the most current information. Like, for example, if you lost your job and you're not driving to work anymore, you need to let the insurance company know that you don't have a 20-mile commute every day. But here's the thing, you don't have to wait till your renewal. If you had a policy that took effect in June and then you lost your job and you're not working, or whatever it may be, or you've started working from home, call your insurance company today and tell them, re-rate me because my mileage is different. And this is the same thing I tell somebody if they retire all the time. If you retire, call the insurance company and say you're not driving to work anymore. Just like the insurance companies will re-rate you if you buy a new car. They're not going to charge you for the Ford Fusion if you suddenly have a Ferrari. They're going to change the rates. So if you change your mileage, tell them now. Don't wait for the renewal. You can get that done. And for a lot of companies, you'll get a savings, though not all companies are as responsive.
Well, and I'm going to get into my personal experience here for just a second. I changed companies recently. I got a quote from, it was like a multi-$1,000 difference between a couple of different companies for 6 months, and I've got driving history, so that's a long story. But either way, I mean, the fact that the rates were so different from each other, and again, that loyalty thing. I've been with that company for 25 years. I switched. I made that switch, and I was a little bit reluctant to do so. The other thing, too, I noticed for all the different companies I shopped, the first option, they have this preferred. Here's what you should get, right? And there's a big difference between how they set it up. But almost every single one of them had a preference for me to actually sign up for lifetime medical care that's still available in Michigan. They didn't want me going to the lower thing. Have we seen that? I mean, why is that advantageous for the companies to get you to go that route?
Well, so a couple of things. One, I wouldn't be so sure that everybody gets the same recommendation, right? We actually challenged one of the big insurers. This is going back maybe 4 or 5 years ago. One of the nation's largest insurers. We found that when you went onto their website and answered certain questions, depending on who you were demographically, they would offer different coverages to you, which is, and in some cases they were giving bad information, and that was the basis of the challenge, and they ended up paying a big fine and what have you. But the point is, the companies, they are looking for kind of their preferred customer, and their preferred customer doesn't have to do with whether or not you're going to cause accidents. You said you have some driving history. They still might want you to buy that unlimited policy because there are other things about you they like. They think that you might buy a homeowner's policy from them, maybe sign up for their financial services and banking and investment accounts, maybe buy a life insurance policy. Whereas drivers who don't fit the profile that they like, the long-term profile they want, they're going to offer much less or suggest much less coverage to them because they're just not as interested in taking them on as customers. So this is one of the things that I've been fighting for a long time. It actually is one of the stories that I've been sort of borrowing into as America's kind of confronted the questions of systemic racism, because we see the way that divides out throughout the country. But but the point that you made about the difference in premiums is actually a very interesting point, and it's something that we struggle with a lot around the country because insurance companies always say we have a very, very competitive market, right? That's the reason. The reason that we don't have good, strong regulation in Michigan of the insurance companies is because the insurance companies push the argument that the market is very competitive. But is it really competitive if two companies can charge such wildly different rates for the same product? That's not competitive. That means that there's something going on that's wrong, right? A competition from a consumer perspective should say, these companies are both fighting for me, and they're trying to get the prices to be closer, lower. And yet you'll have one that's charging you $1,000 more, yet they still get to do business. I mean, how could a competitive company survive with that much higher rates unless the market was not competitive and there was something else going on?
Well, so what do we think it is here in Michigan that's so different? Because I mean, obviously, we just recently switched from the system where everybody had to have the lifetime medical coverage. Our no fault with the unlimited medical benefits has changed. I haven't seen much evidence yet or numbers to see how many people are taking advantage of that change. If they see it as taking advantage of it, obviously some people don't. And CPAN's been very vocal about that over the years.
Right.
But what do we know about the changes and how many people are actually doing something about it?
Well, some of the reporting that the insurance companies and their associated trade organizations were saying early on was that they didn't expect there to be much shift away from the unlimited. Look, Michigan, the insurance industry and the politicians often say, oh, Michigan is such an outlier. And the prices have been very high, but particularly in Detroit, not necessarily statewide. Michigan has a lot of the same problems that we see in states throughout the country, to be honest, with the caveat that Detroit bears so much of an excessive burden on insurance and sets it apart. That is unique. But what we see in Michigan is really a reflection of the weak oversight of this industry. Now, you don't have to love the idea of regulating business to understand that the government regulates our behavior. They require all of us to buy this insurance product. So that creates a different and special obligation of government to make sure that the companies selling it to us treat us fairly and make the product somewhat affordable so we can comply with the law. And so what the insurance industry was saying about the switch over from the old all unlimited to kind of these various options was that they didn't think most people would switch. And the way it's been priced, and I've done an analysis of some of the other big companies, including Citizens and auto owners in Michigan, the way it's been priced is if you live in most parts of the state, the unlimited PIP is not particularly unaffordable. Now you're going to have to pay more for your bodily injury coverage now because of the switch in systems. So that was one of the side things they didn't really want you to hear about when they passed the law, which was your PIP premium is supposed to go down, but your bodily injury liability coverage will go up. So, one pocket or the other is the same pair of pants. But in any case, what they did expect and what I expect is that in Detroit, in Southeast Michigan, you're going to see more people that just have to move to this lower coverage. So you end up having kind of like a caste system, 2 tiers. Either you live in Detroit and you get the kind of the low quality product because that's all that you can afford, and even that's pretty unaffordable. Or you live in the rest of Michigan and you get to retain the benefits that Michigan really quite proudly and rightfully touted as the best protections in America. So the best protections in America remain for much of Michigan, but in Southeast Michigan, particularly in Detroit, the prices for that unlimited PIP are just still through the roof, even with all the reforms and all the limitations that are coming on consumers and the Anti-Fraud Bureau and all of that. It's still too costly in Detroit to buy this unlimited PIP. And in fact, even the bare bones $50,000 PIP coverage is so much more expensive in Detroit. I did a study that showed that if you lived on the Detroit side of Mack Avenue, you would be paying sometimes.
It's where I used to live, right there.
Well, you'd be paying 4 or 5 times more than, or maybe it was 3 times. I don't have it in front of me, but dramatically more than if you lived on the Grosse Pointe Park side of Mack Avenue,
50 feet away.
That's right. I mean, it's just shocking. And then I mentioned earlier that your credit still impacts it. And I'll tell you, I was so angry with the Michigan legislature last year, because when they passed the bill, there was a line that said we're not going to use credit score.
Exactly. So what happened to it?
I heard that and I thought, well, I've been fighting for that for years. Maybe we had a victory here. And then I read the fine print, and the legislators try to pull the wool over our eyes because it said they can't use credit score, but insurance companies can use credit-based insurance score, which is the same thing. It's just the word that the insurance industry uses. No insurance company uses quote unquote credit score. They use this other thing that's still allowed. So when I tested it, what I found was when you have that driver on either side of Mack Avenue, if you also make the driver on the Detroit side have lower credit history or worse credit history than on Grosse Pointe Park side, and we know demographically that's how it shakes out, that person is going to pay even more. I saw the rate differences between a moderate credit driver in Detroit and a high credit driver in Grosse Pointe. It costs you more to buy the $50,000 bare bones policy in Detroit side than it would to buy the unlimited PIP just across the street. That's outrageous. That people would pay more to buy less product, even if they have the same exact perfect driving record.
But this was sold to us as being a real reform in the system, that things like, again, it wasn't going to be zip code based, but they can still have territories. It sounds to me as if the very problem we were trying to solve has not been addressed in this in any real capacity, other than maybe giving you a couple $100 off because of the PIP coverage. But that's really the only thing that's changed here.
Well, two things on that. First of all, on the issue of zip code, because the legislature again said we're going to get, and they literally put the word, we're going to get rid of redlining, and people in Detroit know what redlining is. Where the insurance or banks, they just circle out areas that they don't want to serve, and the insurance industry has come up with more refined ways to do it over the years, and so they stopped insurance companies from using zip codes, but they did it the exact wrong way. They made it so insurance companies could be even more discriminatory, because what now we're seeing is insurance companies aren't drawing those circles around zip codes. They're using what's called a census tract block group. So imagine a zip code and then shrink it down to even a smaller part of the city. So now what insurance companies are doing is they're slicing and dicing Detroit up and all of the state up into these little tiny census tracts and saying, oh, if you live on this street, you pay this, and on that street, you pay another. That has no actuarial basis. That's absurd. And so what happens is we have even more refined discrimination depending on which part of the zip code. And the insurance companies know everything about the demographics of every inch of Detroit and all of Michigan. And they know who lives where and who they want to sell to. Now, what the legislature could have done is they could have allowed for some geography, because we know there's different risk on rural roads than on urban roads. Going both ways, by the way. Yeah. Urban roads, you have a lot more accidents bumper to bumper. Rural roads, you have more accidents that are at high speed. So different impacts. But we could allow for some of that by having kind of broader regional geographic rating, maybe 5 territories throughout the state that would allow some shifting so you can cover that, but still spread the risk. But what this law allowed, and what the insurance companies do, is they stop spreading the risk a long time ago. They're just looking to slice us up in ways that give them the customers they want and allow them to either avoid, or because we all have to buy the product, simply overcharge the customers they don't want.
Is there anywhere that you have seen that has sort of dealt with this successfully? Because, again, the heavy lift that was getting any insurance bill through the Michigan legislature and signed by the governor is not something anybody wants to revisit anytime soon. It's the third rail of politics here in Michigan. It really is. Who's done it well? Examples should we be following when it comes to transparency and actually fairness?
So the best by far, and with Consumer Federation of America, I've been doing reports over the last 15 or so years where we look at the regulatory systems and state laws in every state, and compare that with the rates that are charged, and particularly how much rates increase over time and change over time. And there is no question that the consumer protection law that California voters, by the way, passed back in 1988, because the legislature there failed the voters like they do so in so many states, that has produced the best results. Because what that does is it says that auto insurance rates, it talks about other insurance as well, but auto insurance rates must be primarily based on the first factor has to be your driving safety record. The second is how many miles do you drive, something we were talking about earlier. And then the third is what's your driving experience, because if you haven't been driving for many years, we know that you cause more accidents than people who have been driving for a long time. So those are the three most critical factors, and everything else has to have less impact. Plus, you can't use your credit score in California, so that really helps. So California definitely has set the model, and the other part of it in California, two parts actually, is one, every document the insurance companies use to justify their rates is public, which means we can look at it and question it. One of the frustrations I've had with Michigan as we've switched over to the new rates with the new law was that so much of the documents are kept under seal. I can't analyze them. I can't tell you whether
neither
or not.
neither can the regulators until they turned them over. They didn't have to turn them over until the day that the stuff went into effect.
Yeah. So some of that, I do think that they did make some of it available to regulators before they made it available to the public.
Sure.
But the key thing is that they hide so much in these black boxes that we just can't see. We cannot enter their algorithms to figure out whether or not they're fair or unfairly discriminatory. But in California, every single piece of paper insurance company or digital, document an insurance company uses to calculate its rates, those are public documents. I can go through them all. And so when the insurance companies say here in Michigan, well, we don't want to reveal that information because that will, that's a trade secret. Well, then I'm just going to go to California. I'm going to look at your document there because I can see it there. And the other thing is that in Michigan, with a narrow exception for PIP rates for just a few years, for the most part, insurance companies just file their rates and then use them. They don't have to wait for the regulator to have actuaries scan through the documents and figure it out. And in California, they use this program called prior approval, meaning you can't change your rates until the regulator, including the actuary and rating experts, have determined that it's fair.
Yeah,
and so
we know the insurance companies love that sort of.
Well, it's interesting. They hate it. They hate it
Yes,
in California with a passion. Yet California has been more stably profitable for the insurance industry than most other states, and that's because the insurance industry is as savvy as they are technically. They make huge mistakes in terms of trying to grab market by underpricing and then trying to squeeze people by overpricing. And it's just having the regulatory oversight has actually been a blessing to them, even though they'll never admit it. But the thing is, and you mentioned that, Michigan legislature is not likely to take on insurance again. You do it once and that's enough because everybody went crazy. And that's a real tragedy because so much more reform is needed. What we've seen with the new rates under the new system is that most of the savings that customers will reportedly see are not because the insurance companies are taking in less money. It's because the MCCA, which is the Catastrophic Claims Association,
Yes.
that everybody has to pay a special fee to.
I think it was cut in half, wasn't it?
That was cut in half.
Yeah.
And of course, if you buy the lower quality products, the less coverage products, you don't have to pay that at all. So when they determined how much of a savings there was on PIP as a result of this law, almost all of it, was attributable to the fact that the MCCA part was cut. But the insurance companies never kept that money in the first place. So a company like Citizens, they actually raised their rates on customers after all these reforms that were supposed to create savings. And then the only way you get to the required savings is because of this money that never was going to come to Citizens. That's it. It almost feels like it was a scam where the insurance companies said, we need to change the laws to reduce our exposure. And of course they do, because with these utilization reviews, with the coming fee schedules, they're gonna pay out less to customers that get injured. But it seems like they've done nothing to give back real money.
My guest, once again, is Douglas Heller. He's an auto insurance industry expert. And listen, I want to give you an opportunity to talk about this because I talked to Anita Fox, again, who runs the Department of Insurance and Financial Services here in Michigan, just before July 1st, when all these changes came in. But now, of course, the COVID stuff is going on. What is your level of faith that this office is interested in actually holding these companies accountable, again, for the money that they should be refunding because of the COVID situation, and to doing what the spirit of the law suggested they should do when it comes to auto insurance, especially in a city like Detroit?
Yeah. Well, I'll start by saying that I was pleased with the initial response to COVID, or maybe it wasn't initial, but
Sure.
Director Fox came around and, like I said, was one of the few states that really stood out and said something to the company. So I will certainly give them credit for that. But I still need to see, and I think Michigan drivers need to see them stand up much more aggressively to the insurance industry. And I don't mean to go heavy on them. I mean to just treat them with the same kind of strong arm that the insurance industry treats all of us with, and that the law treats us with in terms of forcing us to buy the product. So I don't think that as yet the department has done enough to make sure that the new rates really comply with the spirit of law. I want to see them really dive into the way the companies have divvied up the state with their new geographic ratings, because I did an analysis of just 2 companies and saw extremely unfair pricing in Detroit. I mean, beyond what you could imagine, especially when combined with the really abusive use of credit history by these companies. That's totally unfair. And so I really think that it's their duty as the kind of the front line for consumer protection to stand up stronger and be more persistent with these insurance companies instead of being as deferential. And that, like I said, they did better than most in terms of responding to COVID, but that doesn't mean it's good enough. We need more from them because Michigan drivers are not going to be able to afford insurance. Now, some of the companies are already lowering rates. State Farm made an announcement that they're going to lower their rates, I think starting this week for drivers. But even with that, they're lowering their rates by something like 11 or 12% in Michigan. But anybody who bought a 12-month policy anytime before that's going to have to wait a year till they can get that relief. And so this is the question for the department. Are they going to stand up and make sure that the rates are entirely fair? Are they going to make sure that as long as COVID and this pandemic persists and the financial impacts and traffic impacts persist, are they going to make sure the companies continue to give back money, or are they just going to let the companies walk away and pocket the cash? That's a question. Insurance is just different. We know that. And so because insurance is a different kind of product, we can't choose not to buy it. They need to stand up stronger, and they haven't been strong enough.
All right. Well, we'll have to leave it right there. We just went through a quick half an hour. I appreciate it very much, but it's always a fascinating subject and something that I know gets under a lot of people's skin. So keeping them informed on what's actually happening out there is always important. Douglas Heller, thank you so much for your time and the research you put into this.
Thanks, Craig. Good to be with you.
My name's M.L. Elric. I'm an investigative reporter and a connoisseur of fine yogurts. I know a little bit about Detroit. I know a little bit about deadlines, and I'm asking you to become a member of DeadlineDetroit.com. Like me, I'm not asking you to do anything I wouldn't do. I'm making a monthly donation. My wife is making a monthly donation. I know that seems redundant, but they need the money, and the money goes to a good place. Getting the story out, getting the truth out. Because if we don't support local journalism, there's some people a couple blocks away from here who are going to get away with a whole bunch of stuff that's going to cost you a whole lot more than just a few bucks out of your pocket every month. Go to DeadlineDetroit.com, become a member. You'll see it's really easy at the top of the website. Give early, give often, give generously. Just give a damn. That's the best way I know how.